In this week's analysis, we're talking about gold and EUR-USD mainly, and maybe a brief, discussion about the DXY to understand where the strength of the dollar is headed over the next couple of weeks. If you love the content, please like, subscribe, and leave your thoughts in the comment section down below. And if you're interested in learning to trade Forex like a professional, check out our complete Forex trading course on Udemy. I have the link attached in the description below. Without further ado, this is a good chart on a 1 hour time frame, and as you can see, over the last few months, we've been in this massive bullish trend, and we can see gold is starting to form some sort of huge consolidation, which usually leads to an extended, price movement towards the upside, right? Bullish price movement if we do get a bullish breakout. Last week we talked about the possibility of price bouncing off these lows and heading all the way up to the all-time highs or eventually creating new highs. But that movement was short-lived by a rejection of these highs, followed by following the Trump announcement regarding the trade deal between the United States and United Kingdom. I don't know if you heard about that. But that being said, gold seems to be positioned nicely for a nice move to the upside, right? And that would translate to watching out for a bullish momentum. If we do get price move in this sort of pattern, then breaking out from this trend line, which may lead to a continued bullish momentum in line with the current trend. So right now I'm going to briefly talk about what I'm watching out for to go long and to go short. If you take a look over here, we seem to have retested this area of value, right? So this is a very solid area of value. Remember, on the 1 hour time frame, we had multiple bounces of this level with a good breakout, and we had a retest followed by another breakout from this area of value. So right now we seem to have retested this area of value, which also coincides with this trend line over here where we had this breakout. So we seem to have had a breakout and retest of this line. Now it's logical to expect a consolidation, right? So small consolidation, probably like this, followed by a bullish move to the upside, which will give us something like this. If this happens, then I'm going to be looking forward to go long. Now, the best price level to go long, in my opinion, will be waiting for price to take out this higher trend line, right? So that will be placing your entry after the breakout like this. Stop loss will be underneath the consolidation, at least a breakout from this main sloping bearish trend line. Take profit target first one will be around these highs. Then you can trail the rest of positions as we go higher. This is my most bullish case scenario on gold right now. I'm waiting eagerly for this setup to play out so I can jump in on this trade, take advantage of that bullish juicy momentum when it comes through, right? That's my bullish case scenario for gold, the best in my opinion. Alternatively, you could watch out for something like this. So if you want to get a better entry around the lows, I wouldn't recommend jumping in on the buy position right now, because that means your stop loss would have to be placed underneath this area of value, also underneath this trend line, right? So that gives you too much room to run a wider stop loss, right? So that's why second case scenario will be waiting for price to see if we do come back into this area of value, get a good bounce, then you can look for an opportunity to go long over here, right, in anticipation of a bullish move to the upside. So this will look something like this. So you take a trend line like this across these highs, then this gives you some sort of lower highs, right, where you can just draw this trend line across. Then your entry is going to be placed after the bounce, in line with the breakout from this trend line as well. Stop loss can now be placed underneath the area of value, and your take profit target first one could be maybe when we hit this trend line, or when we get to these highs, or when we get to this high. So preferably around these highs. First take profit targets, though, this will give you a total risk to reward ratio of approximately let's see, 500 pips to almost 2000 pips, as the case may be. So that's a better good risk to reward ratio in my opinion, because then we would have had another confirmation of price bouncing off of this area of value followed by a good breakout. But there's no guarantee that this happens. But in any case, if we decide to go up, or if price decide to go up, we definitely have to take out this trend line, right? That's the reason why the most probable case scenario for a bullish trade opportunity will be waiting for price to come here, consolidate a little, followed by a bullish move to the upside. Then this will be a very good opportunity to go long, as I explained earlier. That's it briefly for the bullish case scenario. So speaking a little about the bearish case scenario, I wouldn't be going short on gold right now, not at least until, let's say, we drop hard, come into this area of value, get a good consolidation at price levels, followed by a breakout. So this would be a compelling reason. So this would be a compelling reason to go short. When my entry is going to be immediately after the breakout, then this trend line would be irrelevant in my opinion, because this is the most probable and most important key level right now to watch out for when trading gold. If this takes out this area of value, entry is going to be after the breakout, stop loss is going to be above the consolidation listed breakout, and my take profit target is going to be around this base here, this support level here, in my opinion. So that's how I'm going to go short on gold if this happens. Other than that, I'm going to stay bullish because the trend is still intact. Nothing fundamentally has changed. There's still tension, geopolitical tension going on around the world, so I think gold is going to keep getting strong, but that's just my thoughts. We follow the charts to decide the kind of trades we take. That's it briefly for gold. Moving on, we're talking about EUR-USD briefly. So EUR-USD seems or looks like a good opportunity to go short in my opinion, but before you go short, I want you to pull up the 200 EMA and 200 SMA on your charts. This is a 4 hours chart on EUR-USD, and you take a look. You can take a look at something remarkable happening right now. Now, if you have this trend line drawn on your chart, you see we have the trend line cutting across these lows and this one, and over here it seems like the trend line has been broken, followed by this wick up here, which sounds like looks like a retest of this area of value. So over here, so I'm going to use this. So over here we have a good area of support, right? And now price seems to have broken through from that support and retested that support. So logically, it is expected that we see price decline to the downside, something like this over time, which should be a good opportunity to go short, especially assuming if we, turn off our moving average, right? So if there's no moving average, then this looks like the best trade opportunity to go on in my opinion. So the reason why I have this other support level here or this area of value here is because it dates back to these highs all the way back to August of 2024, so August of last year, I think. Yeah, so you can see clear area of resistance now with a good bounce off of that area again. So without a moving average on our chart, this looks like a very good opportunity to go short, considering the fact that we took out this area of value, also taking out this trend line with a good candle, volume to the downside, and followed by a retest now. So there's a logical reason to believe that we are going to go lower. But now, if you pull up the moving average, so this is a 200 EMA and SMA, which gives us some sort of a refined support level based off of the average price movement over 12 candlestick period on the 4 hours time frame. This gives you a very good area of support. You can see we just bounced off of this support last week, Friday, I think, and with this bearish case scenario now seems to be somewhat cautioned, right? So you wouldn't just jump into a bearish trade just because we've broken out from this trend line, we've taken out this area of value, and we've added retest. So right now it is logical to wait to see if price takes out the moving average. So price will come all the way down here, consolidate, and pump up in continuation of the trend, because this trend is still intact with price creating high highs and higher lows. So now to go short, you have to wait for price to come down here, consolidate a little, and give us a good breakout to the downside, which would eventually take out the moving average. If this happens, then you are clear to go short underneath the moving average with stop loss above the consolidation listed breakout, and take profit can be trailed as we go lower. So first target could be as low as this lows, second one could be as low as this lows, and third one over here. That's if we do get all the way down to these price levels. Now, the only reason this will happen is if we see some serious bullish momentum on the DXY, which is what we're going to be talking about on our next chart, right? So this is my bearish case scenario for EUR-USD. I'm urging you to jump into a sell trade opportunity because it looks good. Make sure you are tracking this price movement using the moving averages, right? Especially the 200 EMA and SMA, using them as a support level, a solid area of support. Now, beside this, if you take a look at the price movement on the RSI, we seem to have created a double bottom, right? So you can see one here, one here. So the price level on the RSI seems to have created a double bottom, which usually signals bullish momentum coming on. So if you couple that with the bounce of the moving average on the 200 SMA and EMA, this can give you a compelling reason for a bullish trade opportunity. Now, yes, my bullish case scenario. So to go long, I'm going to wait for this trend lines. I'm going to draw this over here, and I'm going to see how price reacts with the moving average. So do we come lower again, consolidate, whichever happens, provided we take out this trend line. So if we do take out this trend line, then this will be your confirmation to go long. EUR-USD can be crazy sometimes, right? So this will be your confirmation to go long, because taking out this trend line would also mean us taking out this area of support, area of value. So this one over here. So I'm going to get rid of these green lines. So taking out this area of value, which coincides with taking out this trend line, that will give you a good opportunity to go long with your entry after the breakout. Take stop loss underneath the consolidation list of the breakout. Take profit target can now be placed as high as these highs, while you trade the rest of positions as you go higher. That's how I'm going to go long on EUR-USD. Right? I hope that's clear enough. If you have questions, please leave your thoughts in the comment section down below. And this also means that the DXY or the dollar index is going to have to get weaker over the long term, which is over the next few weeks or few days, as the case may be. So when DXY gets weaker, then you can expect this bullish setup to play out as I've explained. Now, if you get the DXY to get stronger, then the bearish case scenario obviously is going to play out. And lastly, we're going to review the DXY chart briefly to see where our bias stands. Right. So this is the DXY chart on the 4 hours time frame. Since last year, since the beginning of the year, January 13th, we've been declining to the downside gradually, price creating lower highs and lower lows. And now we seem to be trading underneath this area of value. So this support level dates back to August of 2024, September 2024. Now we seem to have retested this area of value. Now the question is, are we going to go down or are we going to go up in, anticipation of a bullish momentum coming for the DXY? So this is the 4 hours chart. I'm going to go down to the 2 hours chart so I can spread this all over my screen. And on the 2 hours chart, what does this look like? This looks like a classic bearish flag, right? A bearish continuation pattern. You can see for every bearish move, like this one over here, there's been a consolidation, like a bearish continuation pattern, right? Bearish move, consolidation. Now, bearish move, could this be another consolidation that's eventually going to lead to a bearish move to the downside? That's the question we're going to answer today. But obviously, there's no easy answer to this other than following the chart wherever it leads. So for me, I'm going to watch out to see if price consolidates more within this range, within this channel, right? We go up, go down probably, then take out this channel to the downside, and this means we have our answers towards the bearish case scenario, which means the dollar gets weaker, EUR-USD, GBP-USD all goes higher, even the gold goes higher. Nasdaq stocks probably going to go lower because they use the DXY as an indicator of how the economy is performing, right? But that being said, when this happens, we're going to review the chart again, see what happens, and get our facts right to see how we take advantage of the price action we see on chart. So this is the bearish case scenario for the DXY. If we take out this support level of the channel, then you can expect an extended price decline on the DXY, which will lead to extended bullish price movement on EUR-USD, since we already know EUR-USD is in a bullish trend, right? So now for a bullish case scenario, this one is harder to anticipate because we could simply be ranging within this channel and DXY will look bullish, which will give EUR-USD some time to go lower before we eventually maybe come down or see that explosive movement to the upside. But other than that, I can't give you a clear price level in anticipation of a bullish move to the upside, because this seems to be creating some sort of a bearish continuation pattern. So the waves may continue within the channel, and that will give EUR-USD, GBP-USD enough room to maybe trend lower a little, consolidating towards the downside before we eventually get that explosive movement to the downside or to the upside. Well, it is something to pay attention to if you're trading currency pairs, especially the major currency pairs. Pay attention to the DXY and follow the DXY. Wherever the DXY leads, that's where your currency pairs, as for major currency pairs, that's where they are going to track towards, right? That's it from me, guys. If you love the content, once more, please leave a thought in the comment section. Let me know what you think about this video. If you agree with me or disagree with me, leave your thoughts as well. If you're interested in learning to trade Forex like professional, check out our complete Forex trading course on Udemy. I have the link attached in the description below. That's it from me, guys, this week. See you next week.